My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to help make some money. My job is not just to entertain, but to educate, put it in context, and really, I tell you, try to figure out what the heck is going on. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. All day today, I was asking, are people too eager to buy? I mean, that's how I felt about today's action. If you're returning from a weekend in Miami for the big game, by the way, a Chiefs win counts as an Eagles win. Thank you, Andy Reid. I just think there are way too many people who want to buy right here, right now, after Friday's coronavirus-induced sell-off finally gave them what they think is a good entry point. And that's how the Dow surged up 374 points this morning before finally pulling back to close up 144 points. S&P gained 0.73. NASDAQ surged 1.34%. Now, I didn't do much talking this weekend, mind you. I just listened. What I heard were people wanted to buy at all costs. And we've all been trained to buy the S&P 500 on any decline, seemingly no matter how small. The only individual stocks anyone mentioned were Apple and Tesla. The dialogue was simple. Can I buy Apple in this dip? Do I have to wait for Tesla to go down, or can I just buy it Monday? I try to be circumspect. I like both Apple and Tesla very much, as you know. But buying here seems a little ill-advised, and not because I fear a gigantic decline, but because I want to know more about how the coronavirus is spreading. Well, turns out I was too cautious about one of these stocks. Buying Tesla, even up nearly 25 points where it was at the opening, turned out to be an excellent idea. Stock closed up $129. That move is one for the books, predicated upon both the crushing of the shorts and a love for the car. But Apple's more problematic. I still think it's an own-it-don't-trade-it situation. China's a huge market for them, and all of these quarantines could wreak havoc on their supply chain, and they're closing their stores. Let's take a step back for a second, though, and talk about what I call the setup. The Dow lost 600 points on Friday. Now, that's certainly a sell-off. But when you're at Dow 29,000, that's not much of a dip. I think you want to wait for something deeper because we're still waiting for more shoes to drop with the outbreak. Right now, the virus is spreading rapidly. They haven't been able to contain it in China. I think this is one of those cases where you need to ask everyone you know, what they think. I happen to have the rare opportunity to be on the fabled NFL red carpet on Saturday, interviewing owners, coaches, players. I mostly asked what they thought would happen. Congratulations, Kansas City. Then along came David Tepper. He's the owner of the Carolina Panthers and one of the greatest investors of our time, in addition to being the guy who taught me fixed income trading at Goldman Sachs. I had to ask him about the virus. Now, frankly, I was hoping for some encouragement from the long side. A couple of weeks before, he told CNBC's own Joe Kernan that he was bullish on the markets. Apparently, that's changed.
It's interesting. I mean, it's very hard to figure. I mean, I don't know if you read that Lancet study.
Oh, my God, I read it, yes.
So we're trying to back engineer it ourselves right now, so I think that's what you got to do is try to figure it out. Certainly ruined the environment and the setup right now, so you have to be careful because it may be a game changer, so you just got to be cautious. And 2 weeks ago, before the virus, it was one thing, and it's a different environment right now, so that's what it is.
Well, he's such a smart guy. And look, hedge fund managers change their minds. So don't do what he says because that's just his information to me. But it got me thinking, what is it in this Lancet article that had us so wary? Well, the piece argued the disease could spread to a much wider net than what we're talking about. Much wider net of people because it appears to be spreading almost geometrically, so to speak. It argued that the coronavirus might not peak until April. This is not some sort of conspiracy theory. The Lancet's a vigorously peer-reviewed medical journal that's held in the highest esteem by the healthcare community. The article's very dry. I still want you to read it. The article's very dry. It quotes airline tables, trips from Wuhan, the rest of China, the rest of the world, tries to gauge travel. It seems almost like a science fiction story, though, about how the disease could spread if we don't find a cure or a vaccine. And the quarantine turns out to be too little too late. Now, it's a lot that needs to go right, and maybe too much given the lack of transparency from China. The ruling Chinese Communist Party hasn't been all that forthcoming about the disease, and it's not like they have a great track record when it comes to transparency. For all we know, the real numbers could be substantially higher, which is what the reporting from independent sources like the New York Times seems to suggest. The People's Republic has effectively banned discussion of the virus on social media. They're trigger-happy when it comes to censorship. That's still not a good sign. The new hospitals going up in Wuhan, they have a real Potemkin village vibe to me. So why not tell everyone to sell? Sell everything. Look, you should have a much higher cash reserve than normal. That's what we're doing for my charitable trust, as you'll find out if you join the ActionAlertsPlus.com club in time for Thursday's conference call. I don't think this dip is as viable as everyone at the game in Miami seemed to believe. Everyone except the smartest guy I know in stocks, David Tepper. However, you don't tell people to sell everything unless the sky is falling. I made one of the best calls when I told you to dump everything right before the big breakdown in 2008. You could have sidestepped a 40% decline from peak to trough if you'd listened to me. When we'd fallen to Dow 6600, my late friend Mark Haynes told me we'd reached the bottom, which was your signal to get back in. In retrospect, though, all that mattered was that the market eventually came back. That's all people really cared about. My effort to help you sidestep the worst decline in 40 years, aside from the crash of '87, was widely regarded as ill-advised because the market came back. Oh, I'd do it again. I'd make that call, but only if we're facing the real systemic risk that we were back then. And I don't think this outbreak is as serious as the financial crisis, at least not for the stock market. Why not? Well, first, because I think the virus will knock off a percentage point of the Chinese GDP, and maybe no more than 0.25 globally. Because some companies will get hurt, notably luxury and hospitality, travel companies. Don't want to own those people. But many companies will be okay. Some will do much better, including one we're going to hear from later in the show that was up huge today, not Tesla, that I think has more to run. In fact, this event is the ultimate reason why you shouldn't put all your money in an index fund. If you own the stocks of companies with less economic sensitivity and less travel exposure, I think you'll do fine. Otherwise, you should expect some pain ahead. So it's not systemic risk, but I also don't think it's a buying opportunity. Not here, not yet. Maybe tomorrow, Alphabet, parent of Google, laid an egg when reported, even as I think it's an excellent non-China play. You certainly want to watch our special right after the show, hosted by my friend Carl Quintanilla, to learn more about the current state of the outbreak before you make any decisions. If you buy stocks right now, you're making a wager on a vaccine, a cure, or an effective quarantine. I'd rather wait and see if that's possible before pulling the buy trigger, because we're just too close to the highs for my taste. I'll let others make that hard money. I'd rather stand pat, trim the stocks of companies that will be directly impacted so I can buy them back lower or swap into something else that's down a great deal and doesn't deserve to be. Mostly, I want to wait until we get more bad news about the virus because I think more news is coming that's bad. I want to hear the outcome of the Iowa caucuses because Bernie Sanders could win. He's pretty proud of the fact that he's not a friend of the stock market. I want to wait until we have at least a mid-single-digit decline in the stock market. We sold a lot from my travel trust. I feel good about those sales. I'm ready to buy back when things settle down. Bottom line, I don't want you to jump the gun, people. Let's wait for a real dip, the kind we haven't had yet, before we get more bullish on this market. I'm betting that another shoe will drop on this coronavirus outbreak, and I think it might be a mistake to buy before that happens. Let's go to Lewis in New York, please. Lewis.
Yes, Reverend Jim. First, I got to give you a great big booyah.
Well, I like that booyah. I'll give you one in return. How can I help you, Lewis?
Actually, my question is about Visa. There was a little pullback the other day after earnings, and then the coronavirus has made it pull back even more. So now my question is it time to back up the truck?
No, we're not backing up stocks that have back up the truck right now on stocks. It's too uncertain. I will tell you this. My Chapel Trust owns MasterCard, which we think is growing faster than Visa and did have a much better quarter. So before I even would go to Visa, I would consider owning the stock of MasterCard. How about Brandon in South Carolina? Brandon.
Hey, Jim.
Brandon.
First-time caller. Thoughts on Waste Management being a long-term hold after
at 114 and 118, a lot of people gave up on Waste Management because they said, oh, geez, the Chinese aren't buying any more of our waste. But I am a big believer in Mr. Fish. He has done a fantastic job, and that stock is not done going higher. Fred in Florida. Fred.
Hi, Jim. Fred from Florida.
Yeah, Fred.
How you doing today?
I am doing well. How about you?
Doing well, thanks. What do you think of Bed Bath & Beyond as a long-term
I like this new
investment?
CEO from Target very much. I think the stock represents an attractive speculation on this new management, new board, and a new strategy. Look, I understand, after speaking to a lot of people in Miami this weekend, your eagerness to buy. It's always been right. But I would like you to wait for a real dip, so stand pat. Hey, if we miss it, well, there are worse things, okay? Well, man, money tonight. I've gotten a lot of blowback about my stand on fossil fuels, but tonight I'm doubling down. Hi, haters. Hi, haters. Then 102 million viewers watched the Super Bowl last night. How did streaming services impact the viewing habits? I'm eyeing the winners of the cord-cutting fight. You want to know who they are, and Zoom is up 15% today alone. How are the coronavirus concerns impacting the stock? I've got the CEO, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.